welcome on board the MD and CEO of Bombay Stock Exchange. We've got Mr. Sundararaman Ramamurthy joining in to talk about how their quarterly performance was and what's the outlook ahead. Mr. Ramamurthy, great to have you today on ET Now. Thank you as always. I want to first talk about your quarter gone by, because one can sense that you've gained market share in derivatives in particular following the expiry date changes. Tell me, how is it that you're viewing the sustainability given the recent reforms?
First of all, thanks for having me in the show. Well, my reply is very simple and it continues with what my previous replies have been. BSE has never been going behind the market share as far as derivatives are concerned. Our thought process has always been we should deepen and strengthen the market, which means in terms of products, in terms of expiries, in terms of participants, FPIs, everybody. That is what we have been working upon. So and we will continue to work. Therefore, it is still a growth path for us. We just still have only 470 FPIs with us. There are many more FPIs who are yet to come in. We just hardly have less than 420 racks. We have to build more because there is good amount of demand. There is a long way for us to go. Sustainability comes when you reach the peak. I don't think we have not yet reached the peak. We have just started our journey 30 plus months before, and we have a long way ahead. Delhi bahut dur hai.
Indeed. But Mr. Ramamurthy, you don't think the recent STT hike, the second one at that, is going to impact volumes in any which way?
See, as far as STT is concerned, my thought process go like this. I split it into two parts, into options and futures. As far as options are concerned, if you look at all the previous increases, the previous increases had not had any adverse impact on the volume. So if we go by history, we have safe reasons to presume that the STT increase on options may not impact volumes. It may shape the market microstructure. That is a different issue. As far as the futures is concerned, I think the thought process of the government is towards, it's what we are understanding. We don't know whether it is right or wrong, it's our thought. The thought process of government could have been probably to align the investors more towards long-term equity investment. And as far as mutual funds and others who participate in futures market for arbitrage, to move them slowly towards a longer dated futures so that the impact of increased STT is lesser on a longer term contract compared to a shorter term contract. Today it is monthly contract. Maybe if an arbitrage fund were to think in terms of second month and third month, it will reduce the impact, at the same time bring greater stability, and it will be more a type of a longer term product in the market. I think this is the thought process with which this change is coming. Both thought processes fundamentally are good. So as far as BSE is concerned, since BSE's volume are more in options, the impact of the increased STT should be far less for, if not anything, nothing for BSE's.
Mr. Ramamurthy, hi, this is Harsh here. So you were suggesting that that the STT hikes will likely impact market microstructure. Could you probably elaborate on that, trying to understand? Of course, very little impact on you. That is very clear from your side in terms of commentary. But what would the market impact be? What were you alluding to?
So see, for example, if a retail investor today thinks of trading in options or future, it may be less costlier for him to think in terms of a broad-based mutual fund or equities and take delivery and hold it for a longer time. So I feel the move is towards making investors think in terms of longer-term equity investment. See, the idea of a market is that it should support capital formation for the growth of economy. Capital formation is supported from a retail perspective by contributing more towards, say, a mutual fund or towards the equity investment. In terms of mutual funds, there is a big element of chunk of money in arbitrage funds where the market microstructure change could be driving the mutual funds towards thinking for second month and third month futures instead of like monthly futures, which apparently is the current thought process.
And Mr. Ramamurthy, when I'm looking at sequential margins, you've seen a bit of a shrink. You've you've hiked your opex, and there's been a sharp surge. Could you just quickly clarify and give viewers a perspective as to what's played out on the margin count, and can we see a rebound towards 60+% in terms of margins?
See, neither the revenue nor the margins nor the expenditures at this point of time are fully crystallized for BSE because BSE is in a growth phase. That is one part of it. In the growth phase, last 2 years, we have been investing significantly into technology. Naturally, the depreciation impact of it when you are introducing colo and other things will start coming. That is one element which comes in. Second is there has been a change in the government's position on this payment for gratuity and other labor laws, which has impacted BSE to the extent of around 24 crores in this quarter. I think it is more a current type of an adjustment and it will also settle. The third part is when we start making more volumes, our operating expenditure will go up because a significant portion, around 50% of our operating expenditure is towards SEBI turnover fee and clearing and settlement fee. That is unavoidable. So that also therefore will go up. So these are the three reasons. So and when the top line is growing in a very, very big way, opex will grow to a particular level and then probably it will stand still. So therefore, we are in a flux where everything is growing, including the expenditure. It will come to a sort of a state of equilibrium when our growth phase reaches a sort of a maturity.
And give us a sense in terms of timeline. Is there a visible timeline to that at all? Of course, I mean, it's tough to gauge, but I'm sure that maybe you at least have a better visibility of that. Is there a timeline in mind?
No, you rightly put it. It is very tough to gauge. See, I always tell this. I'm being very honest. Did I ever think 30 months before that what we are introducing in a small way with folded hands by going to every one of the brokers, the derivatives market will see this type of a growth? No, we never thought. One small correction, you are showing me as BSE chairman. I am not BSE chairman, I am BSE MD and CEO. We may like to correct that heading.
No, apologies for that, sir. We'll change that right away.
No.
Sir, in terms of total revenue, and this is, of course, non-transactional streams, how do you expect that to contribute meaningfully to your top line, and how quickly does that tilt or that shift happen? You have co-location, data services, index licensing, tech services. From the current top line contribution, where does it go? If you can give us a sense.
It's a very good question that you have asked, and you have also nicely enumerated the areas of non-transactional revenue that we have. Co-location, as you have seen, it is just in the growth phase for us, and we have started levying for the order flow in a very, very small way. One is it will certainly stabilize. Last quarter from co-location, our revenue, if my memory is right, was around some 45, 48 crores. Roughly, you can take 50 crores. So at this point of time, that in itself should be contributing 200 crores per annum. If the order flow continued to be the way it is, that is one stable flow which we have achieved in the last few months, rather in less than a year. The second area which you probably did not touch was the data revenue. Enhanced data can be sold by exchanges, not the primary data. So we do enhanced data and selling, and we are making some forays into it. Compared to nothing, we are making some headway. And that's in a growth path. I think we will be adding more clients to it. More and more foreign firms, local firms who are into analytical and quant-based training, they are coming to us. So we will be providing them data. That is another important area. Index is something which we are betting in a big way. We have been evangelizing everywhere to all the colleges, all the UWAC and all the women's forums where we go, that they should bring in stability to the market by thinking more in terms of SIPs towards broad-based funds. And in that effect, we have been providing a lot of indices, around 50 indices after taking over from SPDJI. We have introduced, many of them have funds on it. So that is another area where we are growing in a big way. I think that should be a major contributor of our revenue in the coming years. So the BSE technology services, we are not making huge money. It's a very small money at this point of time. Though there are a lot of plans and thoughts, if you look at it, actually, we have been extremely busy in trying to develop a very important market for BSE in the last 30 months. So now I think it is time for us to look deeper into the data, technology piece, and index piece, and even grow it further. So it will be one of our concentration areas in the coming months.
Mr. Ramamurthy, what about your SME platform? Because the momentum there has been staggering, right? You've already hit that milestone of 700 SME listings as of this month alone. Can you now sort of keep up with this kind of pace of 100 listings every 180 days? Can we expect that in the next fiscal as well?
In fact, if you permit me to dream, I would like to have 180 listings every month. I'll tell you why. I'll tell you why. In my opinion, and I think that is the opinion of the government as well, SMEs are going to play a very, very, very vital role in mixing Bharat. We are talking about 6 crore SMEs. Government in every budget is trying to do something to sort of promote SMEs and help them. And the bank finance cannot be the only area through which we'll be able to fund our SMEs. We will not be able to provide employment to all the graduates who come out. They all may end up, the balance who did not get job may end up starting SMEs. More and more SMEs will come. Every region, every state has its own unique set of SMEs. With 6 crore SMEs, 700 is not a milestone to be proud at all. There is a long way to go. It does not mean no that every Tom, Dick, and Harry type of SME should be listed. We should list only quality SMEs. Fortunately, our AI package, which we have developed, is helping us to do it. It has speeded the process. In fact, it's not a big profit center. It is more a service to humanity and to the country. The self-satisfaction that we in our own way are contributing for Viksit Bharat and capital formation. Our focus will continue with SME. We will try to reach the nooks and corner of this country where there are multiple types of SMEs. Take Tirupur, it's a very different type of SME. Take Karur, it is a very different type of SME. Take Coimbatore, it's a very different type of SME. You take every small place in Rajasthan, different types of SMEs. Take the UP, so much varieties of SMEs there. We should do something as MIIs to promote SMEs and bring good SMEs into market platform, which can tomorrow become a large scale company and go to the main board and therefore contribute to the country in a big. That is our dream.
Mr. Ramamurthy, now let me talk a little bit about the SGF, which you've now built up to 150%, which was the requirement. What's the trajectory like going forward? You've done 46, 47 crore this quarter. Does it come down significantly? I'm trying to understand what the PAT impact of that could well be as you normalize that number.
It's a good question that you are asking.
Thank you.
I think our SGF currently stands at around 1,200 crores or something, which is not very big, which is good for as of now. The problem with this SGF computation is it is not amenable for a predictive computation. That is exactly the reason why we got very worried that in the last quarter of the year, there will be shocks to the P&L in terms of over contribution or no contribution. Because once you contribute, you don't take it out. It continues to remain in SGF. So given that we brought this policy, that 5% we will contribute till the time it reaches 150% of the requirement as computed in that quarter. And if it is 150%, only up to the extent of 150% we will contribute. Beyond that, we will not contribute. And if there is no change in the next quarter, we will not contribute. At this point of time, in this quarter, we were not required to contribute 5%. We contributed only around 3% plus, which is around 48 crores or whatever number that you said. And therefore, we did not go to the 5% level since we touched the 150%. Will I be able to predict it will be stabilized at this level and it will not be required for us to contribute anything in the next quarter? Very tough to say. Because what would be as I was always telling, SGF is based on multiple factors which we take for computation. We'll not be able to predict. But what we have done is we have ensured that there are no shocks to P&L at the end of the year, and it is smoothened out and it is distributed.
And Mr. Ramamurthy, talk to us about Star MF, of course. In terms of growth, we've on a low base, you've done just about mid-teens, if I understand correctly. Is there an aspiration to maybe grow that part of the business faster, and is there a possibility to do that?
We have been growing very fast in mutual funds. If you look at it, when I joined, we used to manage 1 crore orders per month. Today, we are in 3 years managing 8 crore orders per month. The revenue does not grow in the same way in respect of mutual funds because the marginal revenue that we get is less. And already there is strain on the mutual fund system because of various other restrictions. And therefore, this marginal revenue increase in terms of every contract traded may not be significantly huge. It is already contributing in a big way to the bottom line and top line. It will continue to do that, and we will continue to do the business, grow the business. What are we doing? We are taking multiple steps. Like we talk to we meet all the distributors. Probably this is the first time the exchanges in a country are going and meeting mutual fund distributors to encourage them to come out with more schemes, to go and meet more people. Why capital creation and mutual funds are linked together, all that we are talking to them to encourage them and understanding if they have any problems which we can resolve. That's one thing we are doing. To all the colleges that we go and meet, significant number of colleges I go and meet, we talk to the students to try their hand in capital markets to mutual funds. To top it all, we have recently tied up with Department of Posts. I'm sure you might have seen it, where in line with what the finance minister in her last budget, not the current budget, last budget, she talked about how to use post offices as channels for financial development, penetration into the country. We have used postal department. Selected people will be trained by us, and AMFI is also helping in that area. We will distribute, we will spread the mutual fund culture. We are empowering people for employment, more revenue for the Department of Post. We want the culture of mutual fund to spread to all the villages. We don't want villages and tier 2, tier 3 cities getting into Ponzi schemes and bad investment decision. Instead, if they put in an index fund or in a broad-based mutual fund, their money is comparatively safer and they are contributing for the country's economic growth. So we will be putting all efforts out and out to ensure that this financial penetration through mutual fund routes happen to all corners of the country.
Interesting. Mr. Ramamurthy, thank you so much for your time today. Pleasure having you on ET Now. Thank you.
Thank you so much.